Hi, I'm Lynda Hafner. I'm a top producing realtor at ERA Key Realty in Central Massachusetts, and today's video is going to talk about what is the mortgage commitment versus a pre-approval. So I'm really glad you're here. I'm really hoping these videos will empower you to make really confident and wise decisions when buying and selling your home. The video series I'm doing right now is a home buying process series, and I've gone through all these steps leading up to the mortgage commitment. So I want to talk a little bit more detail about this versus a pre-approval, because I find a lot of my buyer clients get confused and they don't really understand the difference. And if you hadn't caught my video about the pre-approval that I talked about earlier, you really may not understand, so I'm going to clarify that today. Many of my buyers think that when they get a pre-approval or a pre-qualification, whichever it is that they have, that means that is a mortgage commitment. So that's not the case. That in the field, we all know that a pre-approval or a pre-qualification that you get from a lender in the beginning of the mortgage process is basically just skimming the surface of the financial information that the lender's going to need in order to say, yes, 100%, we're going to loan you this money and you can buy this house. So this is why I want to go over some of the differences so that you completely understand it. So a pre-approval or a pre-qualification, I'm just going to differentiate between the two of them. Okay, a pre-approval means that what you've told the lender for how much you make and what your credit score is, with a pre-approval, all that is verified by the lender and they confirm those facts. So a pre-approval is actually has a little bit more weight when you go and you try to put in an offer with a seller because they know it's verified information, whereas with a pre-qualification, generally speaking, a buyer is telling the lender, this is how much I make, this is, what I have for bills, and this is what my credit score is, but none of that is necessarily evaluated and confirmed by the lender. So in that situation, what they give you is called a pre-qualification letter. Okay, now I understand buyers get confused and they think, well, I have a pre-approval, isn't that a commitment? And it's not, only because it's only committing your financial information. It's not confirming the commitment based on the house that you're buying. So the lender also needs to confirm your information and will the home that you're planning to purchase meet all the requirements that they have to give you the loan. The mortgage commitment letter comes much later in the process. It comes pretty much a week before closing when all of the details of the home you're purchasing have been verified. The lender has sent an appraiser out to the property. The appraiser says, yes, the property is worth what the buyer is putting their offer in for. And if it's a VA or FHA or USDA loan, they make sure there are no safety issues that are going to be of concern. And if there were, those are all rectified before getting a mortgage commitment letter. So there's quite a few extra steps involved in the mortgage commitment versus a pre-approval. Pre-approval is basically just the buyer and the buyer's info, whereas the mortgage commitment is the buyer's info matched with the house info for a complete package, and that's when you get your mortgage commitment. So the pre-approval comes before you even submit an offer to the seller, and the mortgage commitment comes after you're under agreement. You've gone through the home inspection, the purchase and sale agreement, the appraisal, and a week before closing, the lender tells you, yes, we are committed to giving you this loan, and then we just wait for the clear to close, which all of us in the field are very excited when we hear the words clear to close. That means we're ready to go. just a side note is that it is important for everyone to know that, sometimes the mortgage commitment doesn't come through, and sometimes the lender has to tell buyers, yes, we gave you a pre-approval, but when we went to verify all the facts of your employment, it doesn't match our records. I've had this happen before, and it's devastating to get to a week before closing and find out that something isn't aligning and is not meeting the requirements that the lender has to give you this mortgage commitment, which basically means if you don't have the mortgage commitment, you can't buy the house. Thankfully, it happens rarely, but it does happen. In the event that the lender says that they cannot give you this mortgage commitment, this is at the point at which usually you would have to decline from buying the house and go through and pursue getting your deposit back, which, if it is because of a lender-related issue, in most cases, you should be able to get that money back, because that language usually protects you in both the offer and the purchase and sale agreement. If for some reason the mortgage company cannot give you that loan, then you should be able to get your deposit back. Just kind of wanted to mention that could be a possibility, although, like I said, very slim chances. Maybe happens 5% of the closings that I'm associated with. You don't want to take any risks with not getting a mortgage commitment. So the preventative approach with that is that once you have an accepted offer and you're going through that process, there's a period of 45 days from offer acceptance till closing. And in that 45-day period, you want to make sure you keep your job, you don't do any funky, huge deposits being put into your accounts that can't be explained. You want to make sure that you don't open any new credit cards, charge any new purchases. This is not the time to go out and buy furniture, for example. Okay, because basically the lender is going to see every single thing you do in that bank account, because right before closing, they're going to go through your entire bank statement, see everything that you've purchased, and they're also going to do a credit check right before closing. So all of those things are going to be evaluated. So make sure that you ensure that you will get the mortgage commitment by not doing any of these crazy things. It happens, so let's prevent it. The clear to close is that final stage when all the documentation is accounted for, the lender has all their I's dotted, all their T's crossed, and everything is good, and we can schedule the closing, schedule the walkthrough, and everything that comes just before the closing. So I'm gonna talk a little bit more about that in my next video. In my next video, I'm going to go over the closing process. Just gonna go through step by step, explaining, what to expect, what you need to bring to closing, and things like this. Very helpful information, and it's good to know it in advance, help you to prepare, and hopefully all this info will empower you to make the best choices when you are thinking of buying and selling a home. If you have any questions, please feel free to reach out to me. My contact info is below, or subscribe for future videos to get more info that way as well. You can comment in the comment section. All right, have a great day. Till next time, bye.